Friday, May 16th, market analysis. Stan Ehrlich, good morning. 9:54 California time. We have continuing strength, minor, modest new highs for the trend up in the stock market indexes, which I always start out with market indexes, and then I go to futures markets, and I'm following several stocks lately. So Tesla, variety of others. So, overbought conditions. That's the first thing I look for to start then looking for specific price behavior. And that would be bearish engulfings. And it is a modestly customized version of it from the standard Japanese candlestick version. Also, my relative strength index is providing me with the overbought levels, and it is a customized, fairly significantly customized version of Wells Wilder's original RSI. I call mine the ERSi, Ehrlich Reversal RSI. So we have a completely perfect setup in the last couple of days, which means we first got overbought, and now all I need to do is get an outside down day, a bearish engulfing, and then I have these green buy signals generated automatically the moment the conditions are met, the conditions are met, and sell signals. The system is developed to pick turning points in the market to the day they happen. And as you can see, some of them last only a few days. Some of the signals last many months. In fact, occasionally a year plus. Huge, profound, long-term turning points. But they don't happen very often. Those huge, profound, long-term turning points only happen once in a long term. Once every 6 months, a year, some things like that. So they're not a lot of them, but sure as heck have a significant number. Okay, enough said. All we have to do at this point is drop below yesterday's low, which is not super close. But remember, the volatility has been picking up in general for the last couple of months. And as a result, this could have the props knocked out from underneath it very easily and drop below yesterday's low. So without that much of a big deal, that would generate my sell signal. So I'm watching very carefully for signs that the market is starting to do that kind of thing. Double tops, which we've got at the moment, but it's not starting. It's just right there right now. Frankly, it looks like it's going to probably make new highs. And we have the spider. That was the E-mini. This is the father, so to speak. The spider, new high, high and last, and continuing to climb into this very wide basic resistance area, which is the rally highs that we've essentially seen November, December, January, February, and into early March, which have stopped rallies and also stopped minor downside dips. But that defines a very wide resistance range because we're coming up to it from underneath, and we overbought, let alone the fact that we do have gaps to close about approximately a week ago, almost exactly a week ago, last weekend, in almost every index. So I'm looking for those gaps to get closed at a very bare minimum when the market starts to turn down, which I think is going to happen very, very soon. This is Friday before weekend. So sometimes we get a profit taking on strength or profit taking on a sharp decline that helps cause potential reversals on a Friday. So here we are, maybe, but it's not starting yet. We're right around the highs of the day. And with the QQQ and the NASDAQ, that's the only two, the NASDAQ, that haven't been able to make higher highs than yesterday so far. Pretty close, but starting to dip down slightly. I don't know. I need to have a break below, obviously, yesterday's lows at 515 and lower. for the QQQ. For the NQ, the futures contract, we have an inside trading range doji at the moment. Yesterday was at one point a bearish engulfing, but it did close slightly higher, therefore negating the red, which it was for a while. And the close is what counts. So it's not red on the close. We don't have a bearish engulfing on the close. But remember the bass-backwards reversal, which it was, an outside up day and overbought conditions. And I'm not quite sure how to handle this, but I've seen this condition occur many times, and very often it ends up being a turning point. So I'm not quite sure how to handle this. Now, if it was an outside down day, it's flat out a bearish engulfing ER sell signal, and I would expect it to drop down substantially, quickly, and maybe a huge, but at least a small minimum move to start. So, not there yet. Maybe about to. The NASDAQ futures contract, didn't even rally that close to the high so far today, which, of course, in order to have a bearish engulfing, we need to get above yesterday's high, which is around 21,528-ish. Yeah, 29. So it's not there. It's trading below yesterday's high and above yesterday's low. Inside day, doji doesn't mean too much so far. And the YM did make it above yesterday's high and is making a new high for the whole trend, but it's still basically at or a little tiny bit above this resistance area that so far has stopped rallies. So if we can get more strength here, there are some reasons to believe that we got one more sharp little pop before it turns down. Maybe, but I'm not voting in that direction. I'm voting toward a failure and a turnaround and a reversal, I hope, to start a significant break, to come down and close gaps. And there are, in some cases, some multiple gaps below the market. So I'm watching very carefully for the type of price action that I would love to start screaming bloody murder about. And that would be basically the bearish engulfing, which we could have on the YM, and it would turn red. We do not have to be overbought on the same day that the engulfing happens, although that's very common. More than half the time that happens. Now, shot in the new highs, popped up. Yeah, just might see it peter out here a little bit, but no sign of it turning around on the 1-minute charts. Russell, overbought again, still in the resistance area, above yesterday's high, gap to close under the market, prime condition for all of a sudden bearish engulfings, and an ER red sell signal. Next, the Russell 1 minute, it failed on this rally so far. I really can't come up with anything fantastic, except it needs to go all the way down below 2074 in order to have a bearish engulfing. And the bond market, it did have a bullish engulfing yesterday. Remember, my YouTube was commenting about all it needs is another couple, 3 ticks or so, and I'll get a buy signal. Well, shortly after I went past bonds and then the notes, etc., energies, grains, it did have one just a few minutes later. So this is the bottom, in my opinion. It is holding at a decent trend line at previous lows in oversold conditions, and I expect to rally back up to about 115.5, and that is probably a minimum. We got above yesterday's high. We are holding higher on the day. There's nothing wrong with this buy signal as of yesterday so far. It looks classic. Next, 10-year notes are the same. They're a lot closer to resistance. So that's something to watch out for. And today's rally high almost closed the gap completely. Not quite. Very, very close. I don't think that's going to stop it. I think it's going to get into resistance and probably come up to about 11 and a half. Maybe even break through that level. And then we can see if we can get more upside objectives involved, but not quite yet. Otherwise, this has been a big sideways trading range since March. Yeah, you popped into new highs, but we had a bearish engulfing sell signal on the high day. And then it came down, made some new lows for a month or two, and came right back up into the same range, and we went back down, and now we've got a brand new buy signal. So I'm modestly friendly for a little while and for a decent rally of, I'm going to have to say, a point, maybe more. Crude did have a bullish engulfing on May 8th. It went up 1, 2, 3 significant days in a row after that. And I am implying that anytime you see these green or red bars, that yes, within a few days to maybe a week or two, there should be a very significant move, green up, red down. All right, so that happened. Then it pulled back a little, and now we're starting to work its way a little bit higher. Excuse me, cough. So I'm liking what I'm seeing. I think we're going to make a new high above 63.44 soon. Even if it dips down a little bit lower than yesterday's lows, the bigger picture here is a very significant, extremely perfect low on the low day, green bullish and engulfing buy signal, and then another one at slightly higher levels than the first one a month earlier. So this implies it's trying to bottom out. I just need a breakout above 64.40-ish. And if that happens, then I'll be looking for at least 71 and small change and maybe up to 77. Now, heating oil got overbought already after the buy signal on May 8th that worked great. And the dip down yesterday and today to almost the same price level lows is in a support area. We're still there. Hasn't turned up, but I wouldn't be surprised this is the right spot to try it. Yeah, it looks pretty reasonable. If that doesn't hold, then I would expect it to dribble off a little bit more, but not too much, maybe 2.06. But generally speaking, I'm friendly. Looking for the bottom of a little dip here to make new highs, probably next week. This is Friday. Natural gas. Strangely enough, not strangely, perfectly enough. The rally high that we saw Monday was, I believe, only 2 days late on a very large head and shoulder top, last shoulder timing point. You take the highest high, which would have been for the first shoulder, on January 13th, and you measure the amount of time, hours, days, minutes, weeks, whatever you want, amount of time to the highest high, and this is daily data, so the number of days. And then you take that time measurement and you go to the right into the future. And you say, well, head and shoulder tops are very symmetrical typically. So around that exact date, within, say, 5, maybe 10% early or late, I would love to see a rally high and turn down again to make the last shoulder high. Now, what about the price? Well, we know where the low is here. It created a neckline that's relatively flat, almost, but downward slanted very slightly. So the shoulders could very well be around the same price levels because the pattern looks like it's going to be a relatively flat pattern maybe. And sure enough, the rally high would have been about 3.87 something. What was this high? 870, 3870. This rally high was 384. Very, very close to the same level. And that is over several months. This formation is very symmetrical and a textbook example of a head and shoulder top. Not only that, sorry, not only that, but it also had a head and shoulder top in the head and shoulder that was by itself a small pattern that took only 1 month and was the head of the bigger pattern that worked. Great. And I stair-stepped you through that day by day, all the way down to its minimum downside objective, which I had forecasted well in advance, past tense. Let's see if this one does the same thing. If that's true, it's awfully bearish. It's going to get down to about $1, 1.0. I find that a little stretch of the imagination, but that's what it says. So if I get halfway there, sorry about this cough. If I get halfway there, I'm going to love it to begin with. So we'll see. It's going to take 2 or 3 months. What about gold? And silver, platinum, copper, then grain. Now, gold broke a little support, dropped off more yesterday, but closed on a strong note. The rally continued slightly this morning, but is giving it away completely. And we're back below this previous low, which was a minor support level. I think we're about to see new lows for the move next week and probably get down to a little below 3,000 or come very close to 3,000 next week. Silver, pretty much the same commentary, sitting at the bottom of a support resistance zone. It's already punched a hole in it many times in the last 3 weeks or so. So I think we're about to see another new low close, and a move down to at least 31 to, I don't know, 30 and a third, and maybe even a bit lower. Now, platinum made a slight new high. It's getting stuck in a sideways trading range. So we're looking for an upside or downside breakout, and that would be starting below 968.5 for a downside breakout, with a close in particular. Needs to close down there or lower, or above 1,009 on a close plus. Not happening. So it's been a few days. Well, yesterday's low didn't stay down there. That would have been good, but it didn't stay there. It turned right around completely. I don't know. I'm going to stay quiet on platinum for the moment. I favor slightly the downside because of the way gold looks. And silver. Copper. Slipping off. This looks like a new low close for a while. In fact, if it closes here, this is a new low close since a month ago. That's significant. But we are not closing below previous lows yet. It looks like we're about to do it. So I am expecting a challenge of 4.47, a break of that, dropping below 4.4, and I'm going to go down all the way to 4.2. Yep, that's what it looks like. That's what I'm forecasting. Now, grain markets, soybeans are down slightly at the moment. It's a doji, an inside trading range, but the bigger picture is a disappointing upside breakout earlier this week. Got slightly overbought, not that big a deal, but because of the overbought, I expected a minor turn down. So this is minor to intermediate, minor but not super minor. It is a new low for a few days and a new low close for a few days and below those previous lows. But I need to hold above 1035. If we break that, then I've got some more serious question marks in the back of my head here. The ultimate support is about 1010. Yeah, 1009, 1010. If it starts working below that, then very possibly this longer-term head and shoulder bottom is in serious jeopardy. So somewhere a little bit lower, maybe only 10 cents lower, I'm expecting it to hold, but I'm not recommending a long yet. In general, yes, I like the long side of the market, but I try to get in, bottoms and or longs and get in on shorts at tops. Next, we've got soybean oil continuing to do some minor threatening damage, not quite, but if it closes below 47.30, I'm not going to like that a damn bit. Then I'd be forced to look for about 44.65, and I don't expect that. So far, the double shoulder, head and shoulder bottom in soybean oil had a false breakout. That's not good on Wednesday. Above the neckline on Tuesday's close, follow through above the trading line or above the neckline all day. On Wednesday, overbought condition developed. So all of a sudden, it breaks back below the neckline in a big way. Not good. And now we see more downside follow through today. Not good. So is this head and shoulder actually a legitimate or not? Again, like I think I said yesterday, if we don't break down terribly and very quickly, say by the end of next week at the latest, Monday, Tuesday, Wednesday, sooner the better, close back up above 51.20, then I'm going to like the pattern again. But right now, this is a wound. Not fatal, but not good. To the head and shoulder bottom story. Next, just can't seem to develop any strength. Soybean meal is very close to a new low on a weekly basis since early April. Very close to almost the lowest closing low for the whole damn trend for months and months, years. There's nothing here, not even close to oversold, that causes me to believe that the soybean meal market is about to scramble straight back up again. I just don't see it. If we were to turn around all of a sudden and rally very strongly to create a bullish engulfing today, well, that does change the story, but it ain't doing it. We're near the lows. We're almost a new low close. This is dangerously close to making a total new low for many, many months. Still bearish on soybean oil, I'm afraid. Soybean meal. Corn. Well, I had a head and shoulder bottom developing, but when we started to make new lows this week, we ruined the timing and the price level that look very adequate because of this previous double bottom, which started to work out okay, and we did get a buy signal on the exact low as it started to work its way back up. The buy signal by itself was very good, but I'm looking at the big pattern here with a buy signal for the first shoulder low way back on February 26 of 24. The bottom was the bottom not only of the big pattern, which I've now canceled, but it was by itself, and it did work. A head and shoulder bottom, and the minimum upside objective was fulfilled, and that was around 514.15. So that's come and gone. But the timing is now way off, too much, and the price levels have dropped into new lows, in my opinion, too much, to have a last shoulder low of a 1-year formation. So support held, oversold. We got a little rally for 1 or 2 days, and it's dipping back down again. I don't know. I just have to have some reversal here. It's got to start to hold a little more impressively. Next, wheat, pretty much the same damn story. Rallies are not apparently holding, period. The highs are lower than each other. The lows have been lower than each other, and that defines a bear trend. Lower highs and lower lows over time. And that's exactly what we got. So I am looking for a challenge of the lows here, and very possibly, probably, likely, another set of new lows next week. But there's a chance something else could happen. But got to have a lot more strength to convince me at this point. We did have a fantastic bearish engulfing on cattle Wednesday. It dropped like a rock on Thursday. yesterday. And I'm not surprised it's bouncing slightly today for a little bounce. We did get extremely close to oversold. But, well, wait a minute. Let me reset that scaling. Okay, yeah, we did not necessarily. Sorry. Get close to oversold on the break yesterday. So, you're a little bit in the middle of no man's land. It's a little too late, in my opinion, to go short. But I do expect it to make lower lows than yesterday and today. And I am looking for 202 and a third. Next stopping point on the way down, 200. And then we'll see what happens next. Hogs. It's getting a little bit stuck here in this resistance level on the way up. It's a fairly significant resistance level. Last time we were up here, we had a bearish engulfing sell signal that worked great for a week or two. Now we're right back in the same price levels and maybe turning around again. Wouldn't surprise me. We're not overbought. We came so close. 72.39 for RSI high today. And we punched the resistance, but it didn't stay there. It went back into the same little resistance area. And it wouldn't surprise me if it kept on sinking a little. I think we're turning back down. I'm looking for another support test at 97 3/4, give or take a little. Next, Shell. Well, it's dipping back down. There's a gap to close way down here at 63 3/4, down to 63.40. Don't forget about that. I'm not getting any bearish engulfings. We didn't get overbought. We just hit a resistance area and slipped a little. I can't get a real strong handle on it at the moment. We're having a doji today inside trading range. I suppose it could dip a little bit more. My biggest concern here is this gap below the market. Now, I also at the same time have to point out that this week, early in the week, we started to close a larger gap. The size is not necessarily important, but above the market. So that has shrunk somewhat. And in fact, I think I'll just move the bottom of the gap up to show you that now this is the amount left to close. I favor the upside slightly, but I can't really come to a conclusion at the moment. I like the fact that my buy signal at the very low for April 9th has caused higher highs this week. So I favor the upside, sort of, but I'm a little concerned about this gap down here, so not really sure. Next, we are maintaining prices slightly, dangerously close, but slightly above the neckline, and it was Tuesday when we broke out of the head and shoulder bottom formation in Apple. Now, this is not a big head and shoulder bottom. It is a modest to small one. It started March 13th, so it's only 2 months in size. And that was the shoulder low. Here's the head of the formation, April 8th. And now May 7th is the last shoulder low. 3 days later, after gapping up, we tested the neckline Monday. Tuesday broke through, hit a little resistance. Next day, Wednesday, still couldn't overcome the resistance very well. Dribbled back down, but no rules are broken. We did not trade even below the neckline. Came close. Yesterday was almost the same commentary, and today is the same thing. We're having a doji. Resistance is stopping the rally a little bit. Support just below the market is holding it. That would be the neckline, which is slanted downward. It's not the same price every day. So the rule says don't go below the neckline. Something's going wrong. If you close below the neckline, something did go wrong, and that would tend to cancel the pattern. Next, we've got Tesla making a minor new high for the move. My first upside objective is approximately 361.50, but I think it's a little bit more important as to how it handles 373. That would be my next objective. It's coming along great, but look at this. One gap to close, you got to get down to 307.5. Two gaps to close, you got to get down to 277.90. And even a third gap to close at 240, 267-ish. So don't forget about those numbers. Now, the lowest one, fairly small, along with the middle gap, fairly small. Both of those are below a fairly good support area, so there's a little less likelihood they're going to get closed. But this one is very vulnerable to getting closed. We turned overbought. It could have a bearish engulfing turning red if we get below yesterday's lows all of a sudden. And that would imply that the whole market would drop sharply before the close today. Not really happening at the moment. We're still very close to the high and last on the indexes. And Carvana. Hanging in there pretty good. Is it, like Tesla, going to top out in overbought conditions? Well, this marker here for a possible double top, I'm going to eliminate that for the moment. I really don't think it's particularly relevant. Let's take a look at a bit longer term situation here. This is new high ground completely. So, yeah. Do we have a broadening top? That would be very rare. That's the 1, that's the 2, that's the 3, that's the 4, and this is the last rally high 5. If it's a broadening top, which is very rare. From this point, if this is a broadening top, we would go down right away and close this gap and not stop. In fact, broadening tops usually have a huge move down and make new lows for the whole time frame pattern, and then come back somewhere into the middle. So that's quite significant. I don't think that's going to happen, but the setup is there. This could be a nice looking broadening top, but again, because they're so rare, I don't expect it. But the gap closure would start to look like it. Then if you close the gap and don't hold and start to drop more, then I'm going to remind myself that today, May 16th, I started mentioning possibilities. All right, back to E-mini. High and last, 1 minute chart. Not stopping yet. You guys have a great weekend and profitable trading to you.